How would Warren Buffett learn how to invest in stocks if he had to start all over again? Warren Buffett is regarded as one of the most successful investors of all time, with a net worth of over $100 billion. Including the money he's given away to charities, this would be over $200 billion, making him the richest person living today. If he had to start all over again in 2023 and learn about investing, he would likely follow some of the same principles that have guided him throughout his career. Here's how Warren Buffett would learn investing if he could start all over. First, Buffett would read widely. Warren Buffett is a voracious reader and is known to spend several hours each day reading books, newspapers, and financial reports. As a child, he read every book on investing in the Omaha Public Library, most of them by the age of 7. He has credited his reading habit as a crucial factor in his success as an investor. To learn about investing in stocks, Buffett would likely start by reading books by Benjamin Graham, David Dodd, Phil Fisher, and other influential investors. These books provide a foundation in value investing, which is the strategy that Warren Buffett used throughout his career. Additionally, Buffett would also read financial newspapers, magazines, and websites to stay up to date on market news and trends. He would read publications such as the Wall Street Journal, the Financial Times, Forbes, and trade industry magazines to get insights on the latest happenings in the financial world. Through his reading, Buffett would learn to analyze financial statements. Warren Buffett is known for his ability to analyze financial statements to identify undervalued companies. To learn how to do this, Buffett would likely start by studying the balance sheets, income statements, and cash flow statements found on a company's 10K filings. He would learn how to identify trends and patterns in financial data and use this information to determine a company's financial health and its potential for growth. Buffett would also learn how to calculate financial ratios, such as return on invested capital, the price to owner earnings ratio, price to book, and debt equity ratios. These ratios provide insights into a company's valuation and financial stability, and they're crucial tools for any investor. Once he knew how to read a 10K and its financial statements, Buffett would focus on long-term value. Warren Buffett is a long-term investor who focuses on companies with strong competitive advantages and sustainable business models. To learn how to identify these companies, Buffett would likely study successful businesses across various industries and learn how they achieved long-term success. He would look for companies that have a proven track record of success and a clear path to continued growth. Buffett would also study the concept of financial moats, which are the durable competitive advantages that allow a company to maintain its market position and earn high returns on investment for a long time. By identifying companies with strong economic moats, Buffett would be able to invest in companies with a higher chance of long-term success. In his life, Buffett started by practicing the cigar butt approach of value investing. He has said over the years at Berkshire Hathaway annual meetings that even if he could find these same securities today, he'd likely find companies of higher quality trading for low prices as well. Today, if he started all over, Buffett would focus on these high-quality businesses that have strong competitive advantages. To find these high-quality businesses, Warren Buffett would recognize the need to practice patience. Buffett is famous for his patience when it comes to investing. He would likely take his time to research companies thoroughly and wait for the right opportunity to invest. Referencing his analogy from baseball, Buffett calls this waiting for his fat pitch. Buffett understands that successful investing requires discipline and a long-term perspective. To learn how to practice patience, Buffett would likely study the behavior of successful long-term investors, such as Phil Fisher, John Templeton, and his own real-life business partner, Charlie Munger. He would also read books on psychology and behavioral finance to learn how to avoid common investing pitfalls, such as overreacting to short-term market fluctuations. To go far in investing, Buffett would surround himself with knowledgeable people. He would likely seek out knowledgeable mentors and peers to learn from and bounce ideas off of. He does this today, usually in one-on-one phone calls or meetings. Warren Buffett has a team of trusted friends and confidants who help inform him, which then allows him to make investment decisions. To learn from others and get different perspectives, Buffett would deeply study individual companies and talk to their management. In his life, Buffett would attend annual meetings and do his own scuttlebutt work to research a company. For example, this is how he learned so much about Geico in the insurance industry. If Warren Buffett had to start all over again, he would likely focus on learning as much as possible about investing, analyzing financial statements, and finding high-quality companies with long-term potential. He would read as much as possible to learn this. He would also prioritize the temperamental qualities of patience, discipline, and surround himself with knowledgeable, trustworthy individuals to help him make informed investment decisions. That's likely how Warren Buffett would learn investing if he had to start all over again.